Hi everybody, this is Lara at Elliott Wave Gold with your end of the week video analysis for gold for the trading week ending Friday 5th of October. Price is still range bound. Within that range it's still a downward day which has strongest volume. That suggests a downward breakout may be more likely than upward. If that happens, it looks like downward movement may be somewhat limited because indicators are so extreme. This technique doesn't always work though. The last big consolidation had an upward day, more than one actually, with strongest volume, and yet price broke out downward. While the technique doesn't always work, it does still work more often than it fails. So we're dealing with a balance of probabilities. I'm publishing all of these wave counts on a daily basis now because they're all going to start to diverge pretty quickly after price breaks out of the small trading range that it's been in for the last 7 weeks. And so with the wave counts diverging, I want us to be aware of all possibilities. I have 4 different wave counts because there are still at least 4 different ways to see cycle wave B continuing further for gold. When you have a B wave unfolding, it's essential to always consider alternates. B waves exhibit the greatest variety in structure and price behaviour. It's impossible to pick which one of those many possibilities are correct until the B wave is either complete or sometimes even after it's complete. We have an example of that with silver. Here for gold, this first wave count looks at cycle wave B as a double combination. These are pretty common structures, and within combinations, doubles are fairly common, triples are extremely rare, and within doubles, one zigzag and one flat is by far the most common 2 structures within the double. Here the first structure may be a zigzag for primary W, the double may be joined by a 3 in the opposite direction labelled X, and primary Y may be an incomplete flat correction subdividing 3, 3, 5. Within the flat correction, intermediate wave B needs to retrace a minimum 90% the length of intermediate A. This wave count sees intermediate wave B has not reached that point yet, and so this wave count expects a downward breakout from this consolidation and new lows at least to 1147.34 and likely below. Within the flat correction, intermediate B could make a new low beyond the start of A, as in an expanded flat. We could see a new low below 1123.08 for this wave count. When intermediate wave B has reached its minimum and its complete structure, and we see a trend change, then this wave count expects a big upward wave for intermediate C to move beyond the end of A to avoid a truncation, and for primary wave Y to end about the same level as primary wave W, because the purpose of the second structure in a double combination is to take up time and move price sideways. To achieve that purpose, the second structure in a double usually ends about the same level as the first, so that we have a huge big sideways consolidation. Minute wave 4 may not move into wave 1 price territory above 1282.20. While intermediate wave B is continuing, I would expect price to remain within this channel. This channel is drawn in the same way on all of my weekly and daily charts. Draw it from this low to this low, place a copy on this high. It perfectly shows where resistance was found up here, and if the sideways consolidation continues further next week, we will look initially for resistance at this trend line. If that happens and price reacts downward from there, this would be one of the wave counts that would still make sense. Let's take a look at the daily chart now, where we're going to look at the whole of minor C, where minor B ends up here. Here's minor wave C, subdividing as an incomplete impulse. 1, 2, 3, 4, 5. Minute wave 3 exhibits no Fibonacci ratio to minute wave 1. That's okay. Actionary waves don't always exhibit Fibonacci ratios. Within the 3 actionary waves of an impulse, it's pretty common for gold to exhibit a ratio between 2 of them, and only somewhat common for it to exhibit a ratio between all 3. And so I would expect to see a Fibonacci ratio for minute 5 to either 1 or 3, and the most common ratio for a 5th wave is for it to reach equality in length with the first wave. That gives us a target at 1126. Minute wave 4 now looks like a complete single zigzag, 5, 3, 5. The C wave has moved beyond the end of the A wave. A truncation is avoided. It doesn't have to move beyond the price territory of minuet wave B to avoid a truncation. The term truncation refers to the end of C in relation to A. Here, minuet wave B is an expanded flat, 335. B is over a 1.05 length of A, and C moves beyond the end of A, a truncation was avoided here too. And so this wave count now expects an imminent downward breakout from this consolidation on down toward the target. If the upward edge of this trend channel is breached by upward movement, then this wave count, we would have to see intermediate wave B relabeled. It could then be relabeled as a double zigzag, but it wouldn't be relabeled simply as a single zigzag with this minuet wave 4. At the hourly chart level, if minute 4, not minuet, at the hourly chart level, if minute 4 is over here, then minute 5 should have begun, and it must unfold as a 5-wave structure. We may have 1 incomplete double zigzag for 2. When that's done, looking for an increase in downward momentum for a downward breakout for the 3rd wave. Minuet 2 may not move beyond the start of 1 above 1207.78. At the weekly chart level, this is the second idea for cycle wave B. This wave count still has a pretty good look. It has a perfect fit in terms of all subdivisions. It follows a pretty common pattern, and within it, it's following the most common subdivisions for a triangle. If cycle B is a triangle, we may have a zigzag for A and B, a double zigzag for C. That's the most common triangle subwave to subdivide as a multiple. A single zigzag may now be complete down for D, and this wave count now expects a big choppy overlapping 3-wave structure to backtest resistance at prior support for primary wave E. Primary E may not move beyond the end of C above 1365.68, and the most common place for E waves of triangles to end is reasonably short of the AC trend line. This AC trend line has a really good look. It's been tested here and it's been tested here. Triangle trend lines are quite often or commonly tested within the triangle subwaves, and so this test here within primary wave D of the AC trend line looks absolutely typical. This wave count has a really good look. However, too many times over the years I have expected a triangle is unfolding. It had a really good look, subdivisions all fitted, only for it to be invalidated, and it turns out to be something else. The something else is usually a combination. I've learned the hard way when I expect a triangle is unfolding to always consider alternates, and so this is just one possible wave count. It just has a really good look. Let's take a look at the daily chart now. We intermediate B is this high up here. Intermediate C could be a complete 5-wave structure. 1, 2, 3, 4, 5. Minor wave 4, a relatively brief triangle compared to the double zigzag of minor 2. That's okay. Gold actually quite often exhibits quicker 4th waves than its counterpart 2nd waves. That's actually something quite typical for commodities. And so for this wave count, I've no problem with that disproportion. If primary wave D is over here, then primary wave E should be underway. A movement up at primary degree should begin with a 5-wave structure upward. So far we may have 1, a zigzag for 2, and be looking at an increase in upward momentum for 3. Once price manages to break above resistance at the upper edge of this channel, then we may see some increase in upward momentum. We may see some energy released. This wave count expects choppy, overlapping upward movement for several more weeks to test resistance at prior support about 1305 to 1310. Minor wave 2 may not move beyond the start of 1 below 1160.75. At the hourly chart level, here's the end of minute wave 1. Within minor wave 3, minute wave 2 may be an incomplete zigzag subdividing 5, incomplete wave B, and then a 5-wave structure for minuet wave C. Minuet B could possibly be a triangle. We could have a double zigzag for A, a single zigzag for B and C, looking for a single zigzag down for D, and a final little zigzag up for E. If this unfolds as expected and we get sideways movement in an ever-decreasing range, and D doesn't move beyond the end of B, and E doesn't move beyond the end of C, then look out for a short, sharp downward thrust out of the triangle to possibly end about 1191.27, so that minute 2 reaches the 0.618 Fibonacci ratio of minute wave 1. After that, we'd be expecting an increase in upward momentum as the middle of a 3rd wave at 2 degrees begins higher, an upward breakout out of the consolidation. At the weekly chart level, this is the 3rd idea for cycle wave B. It could be an incomplete flat correction subdividing 3, incomplete 3, and then needing a 5-wave structure up. primary B of a flat would be incomplete, we can't label it over here because it would be less than 90% the length of A, not meeting that minimum requirement for the length of a B wave within a flat. And so if primary B is incomplete, then it too may be unfolding as a flat, subdividing 3, 3, and an incomplete 5. This wave count expects a downward breakout out of this consolidation, with a downward move to reach at least 1079.13. That's the point where primary wave B would be a 90% correction of primary wave A and would have met its minimum requirement. When that's reached and the structure of primary wave B is complete, this wave count expects a huge trend change and a very big upward wave for primary C to move reasonably above the end of primary wave A. Although this is one of the most immediately bearish wave counts, it's also one of the most bullish for the longer term. And finally, cycle B could still be a double zigzag, with the first zigzag in the double a complete and labelled primary wave W, the double joined by an incomplete corrective structure in the opposite direction labelled X, which could be a triangle, and then a second zigzag after X is complete would then be expected to move reasonably above the end of W. This could be a double zigzag, more likely than a double combination, because double zigzags usually have relatively shallow X waves, and if primary X here is unfolding as a triangle, then at its terminus it would be a relatively shallow correction of primary wave W. X waves and double zigzags are usually shallow because double zigzags usually have a pretty strong slope against the prior trend, and in order to achieve a strong slope, the X wave should be shallow. X waves and double combinations are different. They're usually quite deep to achieve a big choppy sideways look. Here, primary wave X could be a triangle with a zigzag for A, a double zigzag for B. This isn't the most common triangle subwave to subdivide as a multiple, but sometimes it's not wave C that does that. It could be other triangle subwaves, so this does still meet all Elliott wave rules. It's just not the most common way for a triangle to subdivide. A zigzag for C could be complete here, and in fact should be for this wave count, because were C to move much lower, the AC trend line wouldn't have a reasonable slope, and it should have a reasonable slope for a normal looking Elliott wave triangle. This wave count expects a zigzag up for D, which may not move beyond the end of B, above 1365.68, and would look like it would end at this trend line, because this trend line sits nicely along this high as well. And remember what I said about triangle trend lines being tested within the subwaves for an Elliott wave triangle. When D is complete, a final more brief zigzag down for E to fall short of the AC trend line would complete a triangle for primary X, and then this wave count is very bullish. It would be expecting another big zigzag up for primary wave Y to look something like this and to move substantially above the end of primary W to achieve its purpose of deepening the correction. That's the purpose of the second zigzag in a double. Let's take a look now at classic technical analysis in the weekly chart first. Within this consolidation so far, it's this downward week last week which has strongest volume within this small consolidation of the last 7 weeks, suggesting a downward breakout may be more likely than upward. But even at the weekly chart now, indicators are very extreme. ADX is now above both directional lines and above 35. It can remain extreme for a reasonable period of time, but at the weekly chart level, this is indicating an approaching end to the trend, if not the end here already. And so it looks like downward movement may be somewhat limited. That would tend to support a bullish Elliott wave count. But volume supports, at least for the short term, a bearish Elliott wave count. ATR continues to slowly decline. This is really normal for a B wave, and my Elliott wave counts the bigger picture still expect that a B wave is continuing to unfold and is incomplete. When the B wave is finally done, hopefully not too long, but it could possibly be several months if not a year, when it's finally done, I'd expect ATR to start to show some increase when cycle wave C gets underway. But that will be a bearish wave. RSI is back into neutral territory. This consolidation has managed to bring it up down from oversold, and it's brought stochastics up from oversold. There is again room to move, but not too much room for price to fall again because they're only just back into neutral territory. What about the daily chart? Here's the consolidation of the last 7 weeks, and within it, it's still this downward day, which still has strongest volume, suggesting a downward breakout may be more likely than upward. Even though we still had a reasonably strong upward day here, it's still this downward day. On balance, volume and price are both constrained. The trend lines for on balance volume are converging, and so we may see a breakout next week. It's also possible price could just continue sideways for possibly even another week before it breaks out. A breakout would be a close above resistance, about 1220, on an upward day with support from volume, or a close below support, about 1185, on a downward day which does not necessarily need support from volume. Upward breakouts do require support from volume for confidence, whereas downward breakouts do not. Price is moving sideways for the last couple of days, and volume is declining a little bit. Although a strong start to this little upward swing, it looks like it's waning. Let's watch on balance volume really carefully early next week. It looks like it may give us a signal, and if it coincides with a signal from price to the downside, then I'd have quite a lot of confidence in a downward breakout, at least for the short term, from gold from this consolidation. ADX for the downward trend reached very, very extreme, while RSI reached reasonably oversold. ADX is declining as price moves sideways, telling us that price is consolidating. It hasn't told us of a potential trend change yet, though. The negative DX line remains above the positive DX line. As price moves sideways, ATR declines and is now reasonably steady, and stochastics has been brought down from overbought here from this upward swing, and it's sitting back down in neutral territory. There's plenty of room for price to rise or fall, but the downside may be limited because at the weekly chart level, ADX is so very extreme still. And Bollinger Bands contracted and holding steady as price moves sideways, MACD full bullish. So this is quite a mixed picture. I want to watch on balance volume next week. I think this is going to give us a signal. But the breakout from the consolidation is still more likely to be downward. This technique does not always work. It didn't work for the last big consolidation, but it does still work more often than it fails. We're dealing with a balance of probabilities, not certainties. That's all for me at the end of the week for your gold analysis. I hope all our members are having an awesome weekend.